In this video, we are going to analyze a live trading situation in the Aussie dollar 1-hour timeframe using some fairly advanced concepts of technical analysis, candlestick reading, trading with divergence and its more complex variations through the relative strength index, and the good old market logic derived from price action trading. This is a relatively advanced example that shows how the subjective interpretations of price can lead to non-obvious trades. The analysis you are about to see was performed using the fractal flow method, which is one of the top day trading strategies available on the market today. I say that because the strategy is built using the underlying mechanisms of the market as a foundation. This is what enables us to apply this strategy in any time frame and any currency pair. Without further ado, let's begin the technical analysis of this Aussie dollar live trading situation. From number 1 to number 5, you can see the market creating higher highs and higher lows in different degrees. Notice that number 2 is a much larger market structure than 4 and 6, for example. Higher highs and higher lows in both major and minor degrees like that mean that the market is in an uptrend. However, from number 5 onwards, the Aussie dollar begins to show a few twists that can confuse many traders. Notice that there are 3 expanding pivots in a row in this price chart. 5 through 8 is the first. 6 through 9 is the second, and 7 through 10 is the third. For those of you who are not familiar with this idea of expanding pivots, it simply means that the market creates a higher high and then it creates a lower low or vice versa. This is a problem for us because it confuses our trend identification. On the other hand, even confusing information can have a good side in certain situations. Notice that we were clearly in an uptrend from number 1 to number 5, and then the Aussie dollar started to get confusing as far as technical analysis goes. The fact that the market started to display mixing signals might be an indication that the apparent uptrend is losing its momentum power. We can do a simple momentum analysis of this market to observe a few interesting facts about it. Observe that 5 is higher than 3 in price action, but in the relative strength index, 5 is lower than 3. This is a very simple reversal divergence, but don't get too excited about it yet because that's a very shallow idea without the proper context surrounding it. You can also observe that number 6 is higher than number 4 in price action, but in the relative strength index, 6 is lower than number 4. This is a simple bullish hidden or continuation divergence. Notice how these two notions about divergence happen around the same area, and they give completely contradictory signals. The reversal divergence is telling us that price will fall, and the hidden divergence is telling us that price will rise. If that's not confusing enough for you, remember that all of this is happening in an expanding pivot formation, which happens to be the first of 3 consecutive expanding pivots. Up to this point, the market has no clear indication about its trend anymore, and you can bet that there are thousands of retail traders thinking the same thing simultaneously. This is also a good example of why it is dangerous to trade with shallow notions of divergence with the relative strength index without considering the proper price action trading elements, and the proper candlestick reading first. Trading with divergence should be the icing on the cake, not the foundation of your whole analysis, as you can see. The second expanding pivot goes from 6 through 9. There is no reversal divergence between 9 and 7, but there is a reversal divergence between 3 and 9 just to make all of this even more confusing. The next interesting thing about this market happens around number 10. Notice that between 7 and 9, the Aussie dollar made a very clear higher high in 9 and a higher low in 8. As far as our technical analysis goes, number 8 is solid market structure at this point. However, in number 10 the notion of solid market structure of number 8 is twisted because candlestick number 10 and its previous candle violate the solid low number 8. Notice also that these candles never closed below the level of low number 8. This can mean different things depending on what way you approach the market. This can be a manipulation if you look at the market in terms of the market maker's eyes. It can also be an opportunity to go long using the fractal flow method because we have a fake market structure in 9, and we have a fractal candle in number 10. We also have a pretty good place to put a stop loss a few pips below low number 4, which is still intact. Beyond that, notice that there is a reversal divergence between 9.1 and number 10. This is not the worst place in the world to go long in the Aussie dollar because we have a few contextual elements pointing to the same direction. This is the long trade you see on the chart, which was triggered at the open of the candle after number 10. Target is invisible in this chart because it is 3 times as large as our stop loss below number 4. However, I want to show you the other trade on this chart, which is the short position. This trade is way more advanced than the long position, so pay close attention to the details. The first indication that our long trade is not as strong as it should be is in number 10.1. Look at the price action reading and the candlestick reading. Between 10 and 10.1, the market goes up to the black horizontal line that comes out of number 7. Number 7 represents the point in which sellers tried to bring the Aussie dollar down before being disproved by the buyers from number 8. This is a common level to watch when we're trying to figure out in which level potential sellers might appear with full force. This is why after number 10.1 the market bumps down to low number 8 again. At this point there is still no reason to even think about a short trade idea, but look at what happened in candle number 11. This is why organic candlestick reading is so important in the realm of advanced technical analysis. Let's try to roll back the chain of causality of candle number 11. The candle opened near low number 8 level, then it went up again to the black horizontal line number 7. Similarly to what happened right after 10.1, the market smashed price down to low number 8 level again. If you take a close look at the upper tail of candle 11, you will not have any difficulty understanding that there were some pretty heavy sellers ready to make this market plummet around level 7. This is an indecision point because our long trade idea is not looking that good anymore, but there is still nothing wrong with it. However, the strength of those sellers in candle 11 is what might start the idea of a short trade. Another thing that builds on this idea is the reversal divergence between 11 and 10.1. I want you to pay attention to the fact that after candle 11, the indecision of the market is clearly displayed in 2 consecutive inside candles marked by numbers 12 and 13. They are not only inside candles, but they have a significantly lower level of volatility than candle 11. If there is a moment to short this market, this is clearly it. We can go long and short at the same time in certain situations because our risk-reward ratios allow us to roll at least 2 stops forward if we are wrong in one of our trades, which is often the case. This is one of the motivations for this short trade even though we don't really have a fractal candle or anything like that. That's why I told you this is a more advanced reading because it relies in a series of subjective assumptions that could very well be incorrect. The short trade was triggered at the open of candle after candle 13 with a stop loss above our apparently strong sellers in high number 11. Our target is 3 times the size of our stop loss, so we can fit within the realistic range of risk-reward ratios. Let's see what happens next. As you can see here, we were stopped out in our long position, and we hit the target of our short position. This is how we can play both sides of the market and get away with a profit even while being wrong in one of our positions. This is only possible due to the correct risk management configuration of our trades. The trades you saw in this video are fairly advanced, and there is a lot more going on here than what meets the eye. For that reason, I want to bring your attention to what the fractal flow strategy is about. Instead of making empty promises about the method, let me show you objectively why I believe this is one of the most comprehensive trading courses available online. Let me show you the table of contents of the video course so you can have a better understanding of how deep things can get. The course has 74 video lectures that range between the foundational aspects of a professional trading strategy, advanced concepts of technical analysis, risk management, a lot of stuff about trading psychology that almost nobody talks about, and of course, various examples of the strategy in live action in many different markets and timeframes to prove that a good strategy should work in any price chart and in any market condition. In order for you to analyze the charts in the way you saw in this video, you must understand several different ideas, and these ideas must become second nature to you. Without this, all you will be able to do is look for simple setups that are doomed to fail in the markets. The fractal flow method allows you to reach a deeper level of analysis that is way more complex than just throwing a few indicators in a chart and looking for simple tricks to enter and exit the market. Once you understand the level of complexity necessary to trade effectively, you will not be able to accept any sort of simplistic analysis anymore, and you will be able to see things that most traders that are still trapped in the simple setup mentality cannot see. This is the main message I wanted to transmit to you. That's it for this video. If you like the work that we have been doing in this channel, and you wish this work continues, don't forget to subscribe, and leave your feedback below. Thank you for watching.